On today's episode, we are going to compare two giants, Microsoft versus Apple, and I'm going to see which one is the better investment for me. So let's get started. Like I mentioned, today's episode, we are taking a look at two giants. And if you're new to my channel, this is something I do every Monday. I call it Monday Matches, where I take a look at two companies. Previously, I did EA Games versus Activision. I also did Baba versus Amazon. I did Baba versus JD. And this is going to be episode 4, which is Microsoft versus Apple. And right here is the point system I'm going to use to help me choose which is the company I like better. And just because one of these companies is going to end up the winner, it does not mean that the other company is a bad investment, right? That's not what I'm showing here. Both of these companies can actually be great investments, but if I had to choose one of them, this is what this episode is meant for. So we're going to take a look at stuff like market cap growth, revenue breakdown, revenue growth, margins, cash flow, the overall business, the balance sheet, forward PE ratio, forward price to sales ratio, and finally my thoughts. And before we go any further, guys, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly appreciate all the support. And if you guys ever want to get in contact with me, feel free to hit me up on Twitter or Discord. I have my own Discord channel where I pretty much just answer any questions if I have time. So I'm very active in there, so feel free to join me. Like I said, I do this every Monday. I call it Monday Match. So for next Monday, I want to know which one you guys want me to do. PayPal versus Square actually got a lot of points. I think it was second for this week. So maybe you guys want to see that one. I also thought about Zoom versus CrowdStrike, as right now there's a lot of software companies that are what people consider overvalued, but these overvalued companies are the ones that are continuing to return strong returns to investors. Then we also have other giants, Amazon versus Google could be. So let me know in the comments below which one you guys want me to take a look at. And if you are listening to the podcast, guys, please make sure to give a great review in whatever platform you're using. It would truly help out the small channel. All right, so first, let's start off with the first point, and it's going to be the market cap growth. And the way I take a look at the market cap growth is we're going to take a look at how the past 5 years have done for each companies. And then after this, we're going to take a look at revenue growth. So if you invested in Microsoft about 5 years ago, you would have been up 309%. That's actually pretty crazy in 5 years. On average, it says that it takes you about 7 years investing in the regular market for you to double your money. So for a company to actually more than triple your money in just a matter of 5 years, that's actually pretty strong. Next, let's take a look at Apple. Apple is up since 5 years ago. This company is up 170%. So this company more than doubled your money as well in less than 5 years. And if we just take a look at the overall SPY market, at the overall S&P 500 in past 5 years, the overall S&P has only given about 45%. So both Apple and Microsoft have been great investments for investors. So like I said, right, just because one of the companies is going to win here does not mean that the other is a bad investment. But obviously right now, Microsoft with giving 300% and Apple only, right? I'm saying only in quotations because it's really not only, it's still really great, giving 180%. I'm gonna have to give the first point to Microsoft. All right, so the second point we're gonna take a look at is revenue breakdown. And what revenue breakdown is when we're gonna see how this company collects revenue, right? One thing we don't wanna see is that one major object be the biggest part of a company's revenue, because if that company's revenue goes down, if that section goes down, then the company will take a big hit. So in theory, what I would like to see is to see a nice evenly broken down between different sectors for that company. And then after that, we're going to take a look at historical revenue growth for the company. All right, so first let's take a look at the revenue breakdown of Microsoft. In their most recent quarter of Q3, this company collected $35 billion of revenue. And that revenue growth was actually up 15% compared to the same time last year. And right, this is their most recent earnings that happened about a month ago. So it was during COVID-19. So it's still pretty impressive that this company showed a 15% revenue growth. Now let's take a look at that breakdown. So that $35 million pretty much is broken down into three sectors. About 11.7 million comes from productivity and business process. All right, so first let's talk about what is inside the productivity and business process. So here you have your LinkedIn products, your Dynamics product, and you have your main office commercial products and office consumer products. For example, all the office applications one uses when doing work. Word, PowerPoint, SharePoint, all those applications are in this. So this makes up 11.7 billion out of that 35 billion. So that's all of these actually make up close to 33%. So that's actually a pretty good thing. We're going to see all of them kind of have similar amount of revenue growth. Productivity and business process went up 15% compared to the same time last year. Next, we have Intelligent Cloud. So in Intelligent Cloud, we have all the products by Microsoft's Azure. And this one is their big breadwinner right now, making $12.3 billion out of the 35 billion. So this is the one that takes a little bit of a head compared to the other two. And this one is up 27%. If you guys don't know much about me, clouding is one of those markets that I am very, very bullish on. And that's why I'm actually pretty happy with companies like Microsoft, with Google, with Amazon, all that are really strong in the clouding server. So next we have more personal computing, and more personal computings. You have your regular Windows commercials, so laptops, you have your PCs, you have your Surface, you have your gaming stuff here, your Xbox One, your Xbox 360. And this one right now is the lowest out of the three, makes up about 11 billion of that 35. Again, most of them kind of make that, they're all kind of evenly spread out at how the breakdown is doing. More personal computing is actually up only 3%. We can see the biggest winner here is Intelligent Cloud, and the second is productivity and business. 27% up in Intelligent Cloud and 15% up in productivity and business process. So we can see, right, this company has a very, very strong breakdown in revenue, right? If one of these products goes down, the other two still make up over 60% of the company's revenue. So that's something I like to see. Next, let's take a look at Apple's revenue breakdown. And they actually, again, this is something you can easily find in the company's earnings reports. And here, last quarter, this company made $58 billion in revenue. And to be fair, let me just be fair, I would expect Apple to be a little more affected due to COVID-19 compared to Microsoft, right? Because Microsoft has a lot of software, it has clouding applications. The only one that I would have expected Microsoft to take in a big hit would have been in the hardware section. And we did see a big hit not a big hit, but we saw only a 3% growth compared to last year, where every other sector in Microsoft had way bigger jumps, double-digit jumps. So Apple is more of a hardware product type company. So obviously, I do see that this quarter we have seen a slowdown in the company's growth. But right now we're more taking a look at the revenue breakdown. So remember, this company's total net sales were 58 billion. 28 billion, almost 29 billion of that comes from the iPhone. And that to me is something I'm not too happy about, right? 50% of this company's total revenue comes from one product. The Mac has the Apple Mac makes up 5 billion of that 58, so close to 10%. The iPad makes 4.3 out of that 58, so about 8%. Wearables, home, and accessories. This is where you have like your Apple Watch, you have your any smart products that Apple has for home. This one is 6.2 billion, so a little bit over 10%. And then you have services. Services is about 13 billion, and that's about 20%. So right, the revenue breakdown I definitely do not like for Apple, just because the iPhone makes up over close to 50% of the company's total revenue, where the other ones make up very, very little. The only one that actually makes up a nice portion would be services, that is close to about 20% of total revenue. Let's take a look at growth. Remember, I do believe that COVID-19 affected this company a lot more than Microsoft, so we'll take that into account. But iPhone sales saw a decrease in sales compared to the same time last year. The iMac also saw a very, very small decrease. The iPad also saw a small increase. Wearables, home, and accessories saw a nice jump up. and services saw a nice jump up. And services is one that I'm actually pretty bullish on for Apple, right? This is one that I feel is going to continue to be one of those growers in the Apple product and the Apple revenue breakdown. Also wearable and home and accessories. These two I feel are going to start taking a bigger chunk and eventually will reduce the necessity of an iPhone in the revenue for Apple. But right now I have to say I like the revenue breakdown for Microsoft a little bit better, just because those sectors are breaking down a little bit better. And if one of them takes a hit, the whole market wouldn't take a hit. But if iPhone sales really take a big hit, it will definitely hit Apple's revenue pretty big. So the second point is gonna go to Microsoft. And again, remember, Apple right now has 0 points, but that does not mean Apple is a bad investment right now. It's just telling me that I would prefer to invest in Microsoft over Apple. Next, let's take a look at revenue growth, and then we're gonna take a look at margins growth. So here on revenue growth, I'm taking a look at this great website, LazyFA, which I use for all my fundamental analysis. And we can start off with Microsoft. Microsoft in 2019 grew 14% revenue compared to 18. In 18, it grew another 14%. And in 2017, it grew about 5%. Microsoft really just started taking a big jump with the clouding server, and the clouding server now makes up a huge portion of this company's revenue. So now as we see cloud grow a lot bigger, it's helping this revenue growth for the overall company, especially also as this company has changed more into a subscription base, has also helped this company continue to see this revenue growth. I mean, in the past 2 years, 14% growth in revenue. That's not an easy feature to do, especially for a company as big as Microsoft. So right now I'm liking that. Now let's take a look at Apple's revenue growth. Apple in 2019 actually saw a decrease of 2%. In 2018, it actually saw an increase of 15%, and in 2017, it saw an increase of about 6.3%. Obviously, we can see with that decrease this past year on Apple, we're gonna have to give another point to Microsoft. And I'm right now hoping all these Apple fans are not gonna kill me. I'm just looking at data right now, and I'm just going with what looks better for me. Now let's take a look at margin growth, and after margin growth, I actually want to take a look at this company's cash flow margins. So now let's start off with Microsoft again. Microsoft's margins growth let's take a look at gross margins. Gross margins for 2019 for Microsoft were 66%. That's actually pretty high for my opinion. Profit margins for Microsoft were 31.2%. These are actually pretty strong. One thing we could see is throughout the past few years, gross margins has a little uptrend going on, not by much, but I would expect as clouding becomes a huge portion of this company's revenue, clouding usually has very strong gross margins, and it also has very strong profit margins, similar to subscription based with their Office 365. As those continue, it continues to show an increase in that gross margins, and the overall profit margins as well tends to have a nice uptrend going on. Now let's take a look at Apple's gross margins. Apple's gross margins for 2019 were 37.8. Remember, for Microsoft, they were over 60%. Now let's take a look at profit margins. Profit margins for this company were 21.2%, where for Microsoft, it was 31.2%. So we can see again, Microsoft has a little bit better gross margins and profit margins than Apple. But again, both of these are companies with very high gross margins and very high profit margins. With profit margins for Apple, they do seem to be somewhere flat. It doesn't seem like there is any uptrend. And if we look very closely, the gross margins actually has a little bit of a downtrend on Apple in the past 5 years. In 2015, gross margins were 40.1. In 2016 was 39.1. In 2017 was 38.5. In 2018 was 38.3. And like I said, in 2019 was 37.8. So we do see a gross margin decrease every year. And again, something you don't want to see, but at reality, the profit margins have not been changed and they're pretty stable. But right now we see better profit margins and gross margins for Microsoft. And we're also seeing an uptrend in gross margins, and we're seeing an uptrend in profit margins for Microsoft. So again, this point is actually going to have to go to Microsoft. All right, next, let's take a look at the cash flow margins for both these apples. And right now, it does seem Microsoft is just killing the game and it's pretty crazy. But I'm gonna say, now that I know that Microsoft has a little bit better than Apple and all this stuff, I'm gonna bet that the forward PE ratio and the forward price to sales ratio are gonna be better on Apple. Apple is gonna be a little bit cheaper than Microsoft. But again, sometimes when things look better, you're obviously going to pay a better price for it, right? You're in anything in life. If it's a better product, in theory, you're expected to pay more for it. So like I said, I do believe for the valuation, Apple might end up winning. But let's continue up with cash flow margins. And then we're going to take a look at this company's balance sheet. And after that, we'll take a look at the overall business. All right, so here I want to take a look at the operating cash flow margins for both these companies. And I don't want to take a look at free cash flow, because to get free cash flow, you do operating cash flow minus capex expense, capital expenses. And capital expenses is whatever this company uses to improve its business. So operating cash flow is the actual money this company collects, the cash flow it gets from its everyday activities, not counting anything else. And I think that's probably the most vanilla we can go. So that's probably the best way. So operating cash flows for Microsoft are 41.4%. And it actually seems to be within this level between mid 30s to low 40% margin ratio. So for every $100 of sales, pretty much what this company does, the cash flow that goes in its operations is about 40%. And that's actually pretty good. It's one of the best I've seen in some time. Now let's take a look at Apple's. Apple's, again, something I don't want to like to see, right? If we take a look at Microsoft, it does seem like it fluctuates between up and down, but the overall trend is still pretty flat. But now let's take a look at Apple's. Apple's trend seems to be more of a downtrend. Operating cash flow on 2019 was actually 26.67. Again, this is a really good number. I'm not trying to say this is a bad number. This is a really, really good number. But Microsoft, again here with the cash flow margins, is going to take another point. And this is actually pretty crazy. I did not think that Microsoft would be winning by this much right now. And I'm pretty sure we know where the match is going to lead to. But I do think that all the other stuff are still very important to take a look at. Let's skip overall business and let's actually take a look at these companies' balance sheet. So we're going to start off with, let's start off with Microsoft again. So Microsoft has about $137 billion in cash. That's a lot of money. This company has about $70 billion in non-current debt. So this company has plenty of cash to pretty much pay off its total liabilities, its total current debt, non-current debt, and that to me is a very, very strong balance sheet. So Microsoft has a strong balance sheet. Apple, I know, has a very strong balance sheet, but let's just take a look at it. So Apple has $53 billion, $54 billion in current investments, and $40 billion in cash and cash equivalents. That's close to $90 billion, a little bit over $90 billion in cash. Obviously, Microsoft has a little bit of more cash, but Apple has been known to use its cash right now to try to improve its business. This company has non-current debt of about $90 billion, and this non-current debt is not due to any time soon. This company has current debt of about $20.4 billion. So both these companies have plenty of cash to pretty much pay off any debt. Both of them, again, like I said, both of these are very, very strong companies, but the balance sheet, if I was just to be looking at the numbers, Microsoft has $137 billion in quick cash. If it pays off its non-current debt and current debt, it will still have about $60 billion in cash. Let's take a look at Apple. Apple has about $90 billion of quick cash, and it has $20 billion in current debt and $90 billion in non-current debt. So in theory, if it was to pay off all its debt, it would be about negative $20 billion. But one thing to note is that non-current debt most of the time is like long-term liabilities, long-term senior notes that most of the time are probably with very low interest and not due anytime soon. So like I said, both of them have very strong balance sheets, but for right now, again, I'm going to have to give it to Microsoft on the balance sheet. Whew. So I hope you guys are happy you guys chose these two giants to battle it out. All right, so next we were supposed to take a look at the overall business, but overall business is kind of just my thoughts, so I just moved that down later. So right now let's take a look at the valuation. First, let's start off with forward price to sales ratio. So forward PE ratio for Microsoft is 30.4 for 2 years from now. Apple's forward PE ratio is actually 23. So Apple is a lot cheaper in price than Microsoft when we take a look at earnings ratio. So for the forward PE ratio, we're gonna have to give it to Apple. Now let's take a look at forward price to sales ratio. Forward price to sales ratio for Microsoft is 9.15. For Apple is 5.05. So Apple has a better forward price to sales ratio as well. So like I mentioned, valuation seems like Apple is a lot cheaper than Microsoft. But in theory, right? Microsoft has better revenue, it has stronger revenue growth, it has stronger margins, it's keeping more cash flow margins, it has a better breakdown. So obviously, I as an investor would be willing to pay a little bit more for Microsoft than I would be for Apple. Again, I'm not saying Apple is a bad investment. Both of these are actually strong companies, but if I was to only choose one right now, it would be Microsoft. And now my thoughts. These are, again, my thoughts, and all of this is not advice, right? I am nowhere near a professional, and these are just my opinions on both these companies. My thoughts, I like Microsoft a lot better because of everything we saw, right? We saw the revenue breakdown. I like how Microsoft has a lot of different products that all are growing even during these tough times. It's also in the clouding network, and it's also in that subscription-based network pretty heavily. Yes, Apple is also now starting that subscription type base, and I do believe the services and the application, wearables, and in-home products are gonna be a huge boost to Apple in the future, but we're already seeing that big growth in Microsoft. Margins, we can't deny the fact that Microsoft has better margins. So for me, on my thoughts, I'm gonna have to give a point to Microsoft. So this one was actually a insane battle. Microsoft comes with 7 points, when Apple only comes with 2 points coming from that valuation. So I hope you guys enjoyed today's episode. Let me know what you guys thought. Like you said, let me know which one you guys want me to take a look at next. Maybe PayPal versus Square, Zoom versus CrowdStrike, Amazon versus Google. So take care, guys. Make sure to subscribe, hit the thumbs up and the bell. It helps the small channel out so much, and I truly, truly appreciate the support. So take care, guys, and see you next time.